Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it looked like was going to be a slow, methodical day, turned into a bit of a volatile / pull-in / switch gears and go from trailing longs to potentially putting on some shorts, because the euro, I think right around 9:10 or 9 o'clock, just really started to come in and break some important levels. And what did that do? That put obviously some pressure on the commodities, and then in turn put a distribution day on the map after a nice 4 to 5 day methodical up move. We talked about different strategies starting from last week, and if you watch the virtual trade floor, you will have seen or read the notes from Tuesday through Friday. I tried to be directional, tried to say, let me take this first part of the move and be one-sided, where I was long stocks that I liked, that I thought had best bang for the buck, and also long some of the indices like the spiders. And then after up 4 days, the market has a lot more to prove, and it's a little bit more risky considering the size of the move that we had. Then you will have seen then I started to be long some of the stocks that I really like, but also short the spiders against it, maybe short XOM that was overbought, and just a different strategy where each week, each time period you have different strategies and you have different gears to drive in. So today, for those who have been watching the commodities and know that silver and gold were at some important levels, and you saw the euro get crushed, you put 1 + 1 together, and that was your lace into some of these commodities, which we'll get to. Now the question everyone's saying is, okay, what does today mean? Does it mean that we're done? There's no more markup at the end of the year. There's no more rally. Game over. At this point, you can't say that. It was one down day. Yes, it's a distribution day, and it's not great to see a distribution day within the first week to 2 weeks of a new fledgling rally. But you need 2 or 3 of them to derail it. And as of today, what we've been relying on is these Fibonacci retracement levels, which have given us clues on the speed and the composure, and they've been very accurate as far as helping forecast what levels to maybe cover some shorts and what levels to target some longs. So if you look here in the spiders, you will see that today we had a pretty potent down move. You can't really sugarcoat it, where you had a day where we closed near the lows of the day. We just engulfed the past 3 days almost. So that shows that this day was a lot more powerful than the last 3. And also, in the note this morning, I said, for things to be just kind of quiet and status quo, it'd be nice to, spend some time above the 200-day. So this way you could hover above and then continue, and that would make it a little easier. So instead, they shook the tree, and the euro fell apart, and it was a decent short. I think some people started shorting the spiders below yesterday's low, which is a trade also. I don't think anyone really thought that it would take out the prior, 2 days ago also, and then come into this area. But you have to take it as it comes, and that's what traders do. This Fibonacci retracements that we've been using, okay, the last few times, this October low to the high, the correction actually was all the way to the 0.618% retracement. Then this move back to 1262, the correction was all the way down to this Fibonacci retracement. So you have your low, a higher low, another higher low. So when you only get 1 day down, it's hard to be aggressive to buy the dip yet. So what you have to do is you have to map out potential areas that are buyable, so you can measure it. So if you look here, we went through that 125.22, and then the 0.382% is 124.32, or right around there, which would take you, right around the low from, what is this? This is from December 22nd. But then again, we've seen that you could still pull into the 50%, you could still pull into the 0.618, and then still have a move. And if we did pull in, just say, to the 0.618, which would definitely be something that would shake everybody up, and I don't think it would happen until coming into the new year, you still sort of had the same type of pattern here. So if you look, again, this right here could be another low if it makes it all the way down to here and still be in this this uptrend, with a low, higher low, higher low, higher low. So anyway, we'll see how it goes. This is 1 day. It doesn't mean it's game over, but it just means that the pent-up energy of just floating to the upside could be off the cards. So I would like to see perhaps a down open with the yields tomorrow with the Italy auction, and then buy it and let it hold a little bit higher, because each time it's come all the way down, these last 3 days definitely are horrendous to trade. And same way, these last 3 or 4 days drove everybody a little nutty before you finally had the move that started. So we'll see how that goes, and we'll just figure it out along the way. As far as the euro, that was the problem spot. So if you look here at the FXC, you will see it got hit first and got hit hard. Okay, and right here was it took out this last uptrend, or this little mini rally, and not only did it take out this small uptrend, it also took out the low from early December. So that put a lot of pressure on the commodities. So if you look at just a GLD, which we've been trying to isolate for you this entire way, guys are actually, I got a lot of good emails today. We were talking about, if you remember, when, first of all, here's your outside day. That was your first sell signal right there, just to give you a little anatomy of the trade. Then you have this small little area that couldn't pose a rally. And if you look on this day, it was a micro outside day. Just to show you a little closer how you have to pay attention to these things. It tried to break out and close in the lows, so there were people that actually got short here or out, seeing that there was no rally ever since this high, and it was on a crazy uptrend. Then you had the quick methodical move to the downside, where it happened pretty fast and furious. And then if you take a broader look here, you will see that it came back up and retested this trend line, okay, and failed, came back in, and then put in this wedge that wound up breaking an uptrend that's been intact for a while. And then we held that area from the prior July. But then remember, we talked about the 200-day, said typically there were these stats, and we talked about the stats with Alex. Alex is like, typically in every other sector it's really bad if you break the 200-day, but for gold, usually within the next week to 2 weeks, it's well above the 200-day, and historically 2/3 of the time it's higher. So we said if it can't get back above it and do the same type of things that historically it always does, it's that much it's that weak, and we started to see that action. That's when I came out with that statement saying, I see higher probabilities of 1400 to 1440 versus 1700. At that point, some people were looking for a bigger trade. They're actually shorting around there. So you could have shorted into this zone, okay, which if you take a look here, and if you weren't able to hold into this and say, okay, I'm going to short versus the high here in the 200, let it beat me. Today was a pretty decent short, on a few different 5, 15, and 30-minute basis, and then again when it broke here. For me, I looked at silver because it was a little bit more clear cut for me. It didn't break those October lows yet, so I knew if it finally did that, especially with gold breaking down, it's going to be a juicy trade. And I haven't traded silver in a few months. So a lot of guys jumped on that with me, and I congratulate you, and just goes to show you that you could know patterns and revisit situations. Okay, obviously I'm not going to get into the past of this trade, but this was the last time that this wedge resolved to the downside, and it did hold that September low. Sorry, I put October low, but it was a September low. And then look at this. Look at this small little tiny rally off of it. It couldn't do a thing. So when it broke below this 2741, that was my invitation to get in there. I got short, a decent amount of size. It was only down about 1.5%, and it closed down 6%. If you look at the 5-minute chart too, you actually had a little bit of time. Or even look more in the 3-minute. It gapped down, okay, and it was hovering there. But really, you did have some time when you saw nothing rallying to get a nice short in here. Who cares that it gapped down? It was a gap and go to the downside. This was your area to get short. And then when it broke 127.41, you had a really quick move within 30 minutes. It went from there all the way down to as low. This is a big trade. From what 127.40 all the way down to 26.80. So that's a decent percentage move. Within a 30-minute time frame. Doesn't get much better than that. And then it went sideways for a while, consolidated, didn't really give you much of a bounce. And then there was another small trade once it broke the morning low. Not a blockbuster, but another 40 cents. So that's decent. So you had a few different trades in there. And now on the daily chart, closed really weak. I'm short only a little bit for some overnight risk. And you look now at the weekly chart, and it just broke this area. And it definitely could lead to at least a move to, what's this? This low here is 26.03. Okay, so that's really not that much as far as right here. So it's almost right there, but I guess you have a bigger area right into here, and then obviously you have the moving average all the way down here. So there's definitely some room to go on silver. The fast money trade was today. The stay with it if you want to, if you have that's your thesis. Could lead it all the way down to below 25. So that was where, the quick action was. That was where if you were looking for the right setup and you saw it, you went with it, and we tried to do it, on the chat room and talked about it, and I think a lot of guys did it, so congratulations. As far as like Google and Apple, they tried to be strong, they just couldn't hold up into the end of the day. All in all, Google still looks really good. On the daily chart, if you take a look here, it did try and get above yesterday's high, and came in towards the end of the day. Maybe it tries to retest this 636 or 632 area that could be viable. It's hard for it to hold up when the whole market came in, but I still think it looks really good. Apple, got to give kudos to Vicky. She put that 409 as the area to sell into, whereas the top end of the resistance before that gap started from the island top, great place to sell. I tried to do that trade. I was just a little early, so I missed it. But again, at least we didn't have much size, and that's why you have to sell early sometimes. I sold my macro Apple, long, or at least my bulkier trade on that Friday, and then you had the Tuesday move, and then Wednesday it sold off. Anyway, if you take a quick look here, you will see that this was the resistance from that October where it couldn't get back above to get into this gap. So it traded really well. This was the igniting bar. Here was your follow through. This was that room you had for it to squeeze through to the upper end, and that's where it failed. So now it traded a little bit below yesterday's low. Who knows? Maybe if we get a little bit more downside action, we'll be able to rebuy Apple right around here, around 398, which would retest this prior resistance that could turn into some decent support, and that's where I would love to buy it for then potentially a move to go back through 410. So again, after 5 days, you had to be ready for some type of move, or some type of profit taking into such a key level right around here. So I don't think anyone was too worried about that. As far as the banks, not much you can really say here except for that last oversold bounce was very, very small. Right, Dog? Was it very small? Very small. That's why some people are a little concerned that this rally can't continue, because if these things start breaking lower, it's going to raise this psychological barrier of people getting worried. If you look here on Goldman Sachs, not much of a bounce. The last time we bounced, we went from 85 all the way to about 115. That's when that brain surgeon upgraded it. But anyway, remember the clue here when it broke 105 and then corrected. Then this rally that happened later in November moved back to about 105. And then we corrected, held, and then look how itty bitty rally that we had here. This is all the rally that happened over the course of the past week and a half. So I'll get this out of the way here. Another higher or lower high here, 1, 2, this is the third one. So if it comes back down to this area, it comes back down to this like 87 area, and it starts to break, it's not going to be good here for the banks. And if you look at the monthly chart, it's hanging out here. This is that area, looking at it from a different perspective right there. And then if it breaks this, the next real level here, what is this? This is like 72, 78. And then obviously the lows from back in 2008, which would be pretty scary. But it's not looking so good. You look at JP Morgan also, on the daily actually. Let's see what that's doing. Holding in a little bit better, I guess you could say. It's holding a bit higher. You have your resistance right here. It would be nice to see it turn tomorrow. If there was ever a day for the banks to turn, you turn tomorrow, and then you clear this little resistance zone, and then perhaps it could be helpful for the banks. But again, it's still controlled by some massive downtrend, and these rallies are very short-lived. Every time it rallies up, trades lower, rally up, trades lower. Now if it could finally hold a little higher, maybe that's something to hang your hat on. If you look at the XLF, you'll see. I guess Goldman actually looks worse than a lot of the other ones as I go through these. First down day, still well above this low, so you still have a low, higher low, higher low. So it's not out of the question for these XLFs yet, or for this group. If it could hold right around here and then take out this area, it would be somewhat constructive going into 2012. So at least that's not game over there. OAH's nice move from that 107, 108 area. So today it turned down. I do still think that this pattern is in check. I'd like to see it hold a little bit higher here. Maybe we can get back in it. And then at some point, when it wants to break this descending channel, which is also the right shoulder of this inverted head and shoulders pattern, then it could go, but we're going to need a good market for that. So it's still in the anticipation phase where it's just building, and there's like institutions building into this whole pattern here. So we'll have to wait to see if they've eaten enough before it can go. Today, cash flow wise, XOM was a really good trade. Talked about places to buy it, places not to buy it. Place to buy it was right here, and then last place for momentum was right around 82. So yesterday I started shorting it, and then we shorted below yesterday's high of 84.95, and nice little trade. Now we'll see if it could continue, and then perhaps for those looking to rebuy it back or looking to trade, this would be your zone for it to hold higher with. I know it was a stubborn trade, but it wound up working out, and at least it was a vehicle for us to make money in this, in this type of day. There were definitely better things to short, but this one wound up working out. At least we had some conviction there because it was very overbought. As far as some of the one-off tech plays, not much to talk about. Oracle did not get into that gap, so we have to see what goes on here. So some of them bounced, some of them didn't. If you take a look at the chart of Oracle, still, huge gap. It traded off the lows that were in from August. Couldn't really get any buyers in here, so we have to see how much longer it's going to stay in this pivot, and if it breaks lower, then this group will be in more trouble. If it could continue to go sideways, maybe it could be a little bouncy. IBM, still trouble. If I were to make a bet here, I think it's going to have a little trouble with some of its earnings coming out in January. Especially you look at Oracle's earnings. IBM, Big Blue, a lot of overseas business, a lot of European business. For the first time, they might feel it. So I think people are a little skeptical there. But at least you have a little bit of a pivot here, so we'll see what happens there. As far as like your Amazon, still very bearish type pattern here. This momentum name has given us a lot of good sell setups. This was the earnings. Your ascending channel broke to the downside, ascending channel broke to the downside, and I know guys have been trying to short this for a momentum play. It hasn't happened yet, but don't start losing sight yet. It starts getting below this 170 to 171, and it could start really moving lower if the market gets hit. If you look at the monthly chart, there's a lot of room for it to fall. So breaks this little 170 area. There's no reason why it can't get below 150, and that's not even that much. Who knows? Maybe even it could hit this 122. So, even though it's corrected, a pretty decent amount, it's still well above a lot of levels here. Like you want to talk about, your uptrend. You have one still intact there. You want to talk about the uptrend from here. You still have it intact to there. So, you still have, before this really feels broken, it'll feel broken to those who've chased it, but you still have, a pretty big downside area you can get to. So don't lose sight of that. If you would have said to Netflix, you would have, that this was going to happen here, you would have called the person crazy. But obviously, you had this trend line that broke, and then you had this upper area that broke, and let's see, it's coming right into there, but we'll see. But anyway, this was a steep uptrend, and you follow up trends until they break, and then if you miss that area, that was your other area. I remember even talking about it right around here, right around this 200. So that was your exit. So anyway, just don't fall asleep behind the wheel with some of these momentum names, because when momentum leaves, it's definitely tough. And from the momentum side, it feels like Amazon, Baidu, Sina, and Priceline are all in question of whether or not these multiples are going to stay in there. On the other side, I like Apple and Google better than those names. So we'll see how it all pans out. There are some saying that people are going to really be going for value next year, for the industrials that have low P's and dividends, for the consumer staples, even the refiners. So we'll see which way it shakes out. The charts will tell us. We'll watch very closely. We'll keep developing and tweaking our go-to list, and we'll keep using our shifting system, because that's really what it's been for the last year, changing gears. We've been on an elevator versus an escalator where we like slow, methodical moves, that create viable levels instead of elevator up, elevator down. But again, that just shows you that you have to, when the move's there, you have to take it, and that second and third tier move hasn't happened. So when the first move happens, you got to be there. And that 4-day move from Tuesday to Thursday, that could have been the move. And now everyone's waiting on the perch for another move. Every time we've done that, either on the long or short side, there hasn't been much follow through. So maybe that'll change, or maybe we'll get a lot of the same. But either way, we'll have different scenarios to trade. We'll let the market confirm them, and then we'll keep moving forward. So today's Wednesday, 2 more trading days to the year. Hopefully you guys had a good day. For those that are in the office like myself, who are not on the beach or not on the slopes, at least there's been action for the past week and a half. So you've been able to tack onto your P&L for the month and for the year. So we've been pleasantly surprised versus 3-4 weeks ago. The first week or 2 of December was really tough to trade. So anyway, get some rest. I'll see you in the morning. Scott Redler, T3 Live. Tomorrow will be a really cool morning call. We're going to go over some of Cass's big calls for next year, and I'll tell you what I agree with and what I don't. Have a good night.